Great. So we've got some time together. I'm going to, like I said last week, I want to spend the majority of the time really focusing on, learning, right? The lesson. We'll spend a little bit of time at the end on going into the live markets, for application. But we haven't had a kind of back to basics, lesson on core strategy for quite a while. So let me run through some of the basics fairly quickly. We'll dive into some odds enhancers and things like that. We're going to look at uh, some live trades that I've taken over the past few days and a couple weeks here. Make sure you understand that all the trading statements and platform results that you see in there, those are all the trades I'm going to share with you are all real trades that were taken in one of my accounts. And it's an account that I use. I want to explain. So these aren't hypothetical returns or demo accounts. I want to show you, full live application of the strategy that we're going to learn. But I also want you to understand, so I trade a more than one account, obviously, and but this account that's attached to the charts and examples that you're going to see, I've just found, with Online Trading Academy and just being in the trading education world for many, many years as a trader, I find that there's a large, there's a really big group of, students, traders out there that would love to, because there's all kinds of mixes. What size account and how much money are people looking to make every day? I find there's a large group around the world that would love, if they could take a, $15 to $30,000 account and be able to make $500 to $1,500 a day on that account, spending very little time in the morning doing it. I just find there's a large group of people out there that would like to do that. And when I say $15,000 to $30,000 account, for the trades that I'm showing you here, I'm not using anywhere near that size account as far as margin goes. Okay, so it's requiring maybe half that to as far as margin to make these trades. So, but I just find there's a lot of people out there like that, and so I want to show you. So we're still going to start out learning core strategy. And we'll look at trades from today, yesterday, the day before, every day for the past probably couple weeks, I think I have in here. And you'll see that $500 to $1,500 a day, just applying the simple core strategy. I can tell you right off the bat, the hardest part in doing this is the ability to keep things very simple, which means following simple rules. Okay, so while this may seem easy and look easy, doing it actually is the challenge because most people just have a hard time keeping things very simple. And well, let's get started. So as many of you know, the strategy that we have here is patented. So I'll show you that in a minute. Let me just click forward here. There we go. So what are we trying to accomplish with core strategy, right? These rules that I'm giving you, if you follow them, what are you trying to accomplish? It's simply two things. Figuring out where prices in any and all markets are going to turn and where price is going to go. So everything we're going to learn and go over, whether we're trading the stocks, futures, Forex, options, whatever, doesn't matter. The whole question is where price is going to turn and where are they going to go? Make sense? If we can answer those questions, let me ask you. If we can answer those questions for you, do you really need anything else? I mean, what else do you need? I guess you need a trading platform and all that. But what else do you really need? You need to know what markets you're trading and the size and all that. But right. Okay, so that needs to be the focus. So to identify where prices are going to turn and where they're going to go with a very high degree of accuracy, we have to be able to quantify the market's real supply and demand. So to do that, like I said, I developed a strategy many, many years ago while I spent time on the floor of the Chicago Mercantile Exchange, specifically in the currencies. My job was to facilitate institutional order flow on a trade desk right outside the trading pits. And during that time and shortly after, I developed the strategy that we're going to go over today and that we teach at Online Trading Academy. The U.S. Patent office actually issued us a patent on the strategy, or much earlier this year. There it is, just so you can see it. Some people like to look up the patent. It was pretty big news. New York Times and CNBC and the Journal covered it. But let's keep going. So what you have to understand is there are really, two groups that we want to identify in a market. Okay. We want to identify the main players in these markets. It's, banks and institutions and the retail trader and investor. Okay. All right. Excuse me. So there's banks, institutions, and retail traders. What I noticed on the trading floor, which, my job was to facilitate institutional order flow. I would take orders every day for banks, institutions, money managers, hedge funds, you name it, and some retail traders. And what really jumped out at me in the beginning and what really hooked me into this business was the simple fact that, I noticed that banks and institutions were right in their decision-making process most of the time, and they tended to make quite a bit of money as a whole, right? They tend to make a lot of money. At the same time, I noticed that, individual traders and investors, right, like retail traders and investors, were equally wrong in their decision-making process most of the time and tended to lose lots of money as a whole. And I was absolutely fascinated by that, okay? Absolutely fascinated by that because, and I didn't really understand it early on because I thought, how can this be? How can one group be so good at this and the other group be so bad? And yet they're both buying and selling in the same market. That's what was confusing for me. I said to myself, they're both buying and selling in the same market. How can one group be right most of the time to make all the money, and the other group be wrong most of the time and lose most of the money? So, again, being a young 20-something and wanting to kind of figure all this out, I thought, boy, if I could just learn, what banks are doing, where do they buy and sell, and why do they buy and sell there, and all that, then maybe I can make that kind of money. Maybe I can be that right. Well, what I didn't do was study anything fundamental, economic reports, anything like that. Economic reports, news, any of that stuff. I didn't spend a minute on that because I had the orders in front of me. So I said, okay, I understand exactly why prices turn and move in markets. When prices decline in a market and reach a price level where demand exceeds supply, and I mean objectively, like for sure, on a trading floor, that. You have the orders in front of you, right? So I saw that. I said, okay, I see prices are falling. It's going to stop right here in the yen because I have a giant stack of buy orders here, and we're the biggest trade desk on the floor, right? So, or one of them. So I have a giant stack of buy orders here, and my Goldman Sachs buddies next to me have an even bigger stack at this price level. The yen is going to stop falling here and turn higher. It has to. That's where the floor is. So sure enough, that's what would happen, and that's what would happen every time, right? So how the whole game worked, I got that. So where I put the work in was to say, okay, all I need to do is figure out how to see exactly that on a price chart and nothing else. Absolutely nothing else. Because you have to remember, by all the time that I spent on a trading floor and a trade desk, watching prices move from real demand to real supply, in other words, where banks are buying and where banks are selling, the whole time I witnessed that and lived through that, there was plenty of news coming out and plenty of economic reports coming out, right? There was plenty of stuff during that time. Back then, people watched other things too, like money supply and all that. Remember that? Anyway, all those reports and numbers were coming out, but I didn't pay attention to that. I didn't even realize at the time all that stuff was coming out. But did it matter? Did it change anything with regard to where price was going to turn and where it was going to go? No. What caused that was where the buy orders are and where the sell orders are. So if we could just focus in on that picture and that picture alone, that's a big part of this. So, but then I thought, wow, well, so what are these retail traders doing to just consistently lose the way they do? And how come the average investor around the world never, matches the returns of the markets? And so on and so forth. And why is there such a giant gap between those who make money trading and those who lose? And now that was 20 years ago. So you tell me, what do you think's happened to that gap over the past 20 years? Has the gap gotten wider or narrow between those who, make money and those who lose? It's gotten much wider. Yeah, just look around the world, right? Those who have money have a lot more today than they did back then. The middle class is basically, I travel around the world all the time, and the middle class is becoming smaller and smaller and smaller. In most countries, there is no middle class anymore, right? It's those who know what they're doing and those who don't. So I want to spend you know time here now. Let's move forward, focusing on exactly what that picture looks like. Before I do, real quick, at Online Trading Academy, I'm responsible for the education and the tools and services that we produce. So what do you think was so understanding how I started, which is really having bank buy and sell orders in front of me. What do you think one of the most important services or tools is that I'd want to build for Online Trading Academy? Well, how about something that just tells you where the orders are or gives you a very good idea of where the orders are? That's the supply demand grid that you see on the screen. We're going to see a bunch more of these in just a minute. But I just want to introduce this to you because you're going to see this on most of the trades that we take. So each morning, I have a very small team that puts this supply demand grid together for 20 of the major markets around the world. And all this is meant to do is, again, where are banks buying and where are banks selling? Okay, orders, supply and demand. Let me run you through the basics. We only have a short period of time together, so because of that, I'm really focused on giving, going over the really important information. So in the short period of time that we have, okay, what are the two things or three things that I can give you to really convey this message and strategy to you? Well, the two that you see on the screen here is where we're going to start. Number one, how do we identify demand and supply on a chart? When I say supply and demand, I'm not interchanging those words for the terms that you're used to, which is support and resistance. That's conventional technical analysis, which again, in my mind, is a very flawed school of thought for a lot of reasons. And I'll explain that more in just a little bit. That's why you don't see many people making a consistent low-risk living year after year trading, using the rules of conventional technical analysis. And I'll explain why in just a minute. Okay, so I just want to make sure you understand, for those of you that are new, when I say supply and demand, I'm not interchanging those words for support and resistance. Very different school of thought, very different rules. So we'll start to identify those in just a few minutes. Number two, you really need to focus on something that I've been alluding to since we started, which is understanding who is on the other side of your trade. It's a critical piece of trading, and I don't see people focusing on it enough. In other words, when you buy, who is the seller and why are they selling? When you sell, who's the buyer on the other side of your trade and why are they buying? Okay, we have to run through this little small checklist during the learning period to make sure that you're buying from and selling to the right people. Okay, make sense? All right, so let's go over that. Let's start with number one, understanding supply and demand. So we're looking at a candlestick chart here, but whether we're looking at a candlestick chart, bar chart, line chart, point and figure chart, volume chart, whatever, it doesn't matter. Okay, so what we're focused on is the price activity, where price is trading at, and almost more important, where price is not trading at. And I'll explain that in a few minutes. But how do I identify, where these orders are by looking at the price action and price action alone, which is the theme, obviously, of what everyone's talking about today at FX Street. Okay. The patent number, sure, I'll show that again just at the end, okay? Okay. All right, so notice price is trading sideways here on the chart. Supply and demand appears to be in balance. Truth is, behind the scenes, it's not a balanced equation. It's an unbalanced equation that takes a certain period of time to play out. Once prices fall, and then notice prices fall away from this level. Okay. Now, when prices fall away from this level, understand we're not trying to predict that decline in price, and we're not trying to make money when prices drop there. Instead, we let it happen because that gives us all the information we need about this level up here. When prices decline away from that level, we understand that happens because supply exceeds demand up here. what this looks like behind the scenes, right? The order flow that's really creating this picture is that, right here when prices drop, your last buy order is filled and you have a significant amount of unfilled sell orders left. Anytime that happens, price is going to fall. It has to. Okay. So there's a few more little details than that we'll get to in a few minutes with odds enhancers. Okay. But once we identify a price level where supply greatly exceeds demand, based on our rules, we wrap two lines around this level, very rule-based. Everything we do at Online Trading Academy is very rule-based. We wrap two lines around this level and carry this level forward, creating this supply zone or sell zone. Another word for supply, retail prices. Down at the bottom, just the opposite is true. Prices are trading sideways. All of a sudden, there's a strong rally in price. Once this rally happens, that's when we can say, aha, we now know where the real willing buyers are in this market, where objectively demand exceeds supply. Okay. So again, based on our very specific rules, we wrap two lines around this level and carry this level forward, creating that demand zone or buy zone. Another word for demand, wholesale prices. Okay. So we're just getting started with this. Let's keep going. So we've started to, learn to identify demand or wholesale prices, supply or retail prices in a market. Let's move on to step number 2, understanding who is on the other side of your trade. Okay, I took a trade this morning in the DAX, and I'll show it to you in just a few minutes. We'll go over it, and we'll dive into some odds enhancers with it. But believe me, when I sold short, we knew exactly who we were selling to. Now, I didn't know this person's name or address or what they like to eat or anything like that, but I can tell you quite a bit about them as far as their ability to profitably buy and sell in a market. Okay. So let's focus right here where we're pointing on the chart. Let's focus specifically on the buyers. So again, like I said in the beginning, it just absolutely fascinated me on a trading floor, and that's just what hooked me into the business. It was amazing to me that one group did so well and the other group did so poorly. So I focused on the actions of those two groups. And when you see what's going on, you quickly come to the conclusion that, wow, they're just buying from and selling to each other. Make sense? Right? They're buying from and selling to each other. So if we focus right here, we will see that the novice retail buyer or trader makes two mistakes. And I saw this pretty quickly on the trading floor. And as I was looking at charts, the retail trader makes two mistakes. The two mistakes this buyer here, if we focus on the buyers right up here, are making. Number one, they're buying after a rally in price. A smart buyer and seller of anything would not do that. They can't. They couldn't if they wouldn't be consistently profitable if they did, right? That goes completely against the laws of supply and demand. Buying after rallying price, mistake number one. Mistake number two is even worse. Not only are they doing that, but they're buying right into a price level where the chart already told us supply exceeds demand. Make sense? Okay. Someone who takes that novice action is most likely to lose. So instead of being that buyer, we want to be the seller. Prices drop. Down here at the bottom, if we specifically focus on the seller, it's that same group of novice traders making those same two mistakes. Here, they're selling after a decline in price. Mistake number one. They're selling into a price level where demand exceeds supply. Mistake number two. Instead of being that novice seller, we want to be the buyer. Buying specifically right here at this price point. Buying here, according to our rules, is the lowest risk, highest reward, and highest probability time to buy into this market. Okay. Now, many of you have read trading books, and what's fascinated me again is over the last, say, 20 years, there have been hundreds of trading books written and tens of millions of content built on internet pages, right? The internet and all the pages of trading and education and websites. It's overwhelming for someone who's just getting started. But if you think about all these strategies and all these strategies and everything else, nothing has really changed. It all comes down to where are people buying and where are people selling, right? So um, let's talk about trading books for a minute. The trading books say don't buy, or let's talk about conventional analysis, right? Chart patterns and indicators and oscillators and all that. Conventional technical analysis says don't buy here at this line because you don't know if there's any buyers yet. Wait for confirmation of this green candle to close. Okay. Wait for confirmation of this green candle. But if you wait for this confirmation of this green candle, which is the picture that's in most books, what's now happened to your risk? Has it gone up or down? Right. It's gone up. And what about your reward or profit zone? What about your reward or profit zone? It's gone down, right? In fact, you cut it in half here. Okay. Now, Boyke, I glanced at the chat and saw your question up there. It actually is a good question. I know someone said don't go there, but Boyke says, well, what books would you recommend? The only, if you really want to, if you're to someone starting out, there's really two books that I would suggest. Okay, I would suggest to, go dig up your box of books, your high school books. Remember, in high school, go dig up that box of books and pull out two of them. Your Economics 101, where you learn about supply and demand, and then your Human Psychology book. I think those are probably the two best books you can read as far as trading. You could throw Dr. Seuss in there too. I'm a big Dr. Seuss fan. Oops, there's the charts. Yeah, but I would suggest those two, right? Your Economics 101 and your Human Psychology book. Anyway, let's move on. So we've started to understand how to identify demand and supply. We've also, started to talk about, how to identify who is on the other side of your trade and why that's so important. Let's dive into some trades. This is a trade that I took this morning. Took here. Okay. This is looking at the DAX. All right. So again, just a short-term income trade, very short-term income trade. Made a little over $1,000 on it, and but let's take a look. So here, now not every turning point in the market is a supply or demand zone, and how we determine which ones are comes down to our short list of what we call odds enhancers. I'll start to go over that in just a minute. Yeah, got out fairly quickly here on this one. I'll explain that in a minute. Okay. So prices were up here. Prices were trading sideways, and we had as far as time frames go, it depends what you're trying to accomplish. So if you're doing that short-term trading for income, I saw a couple questions on that. We're looking at a very small time frame. So I'd say a 1 minute up to a 10-minute chart if you're going to use time-based charts, or if you're trading futures and you can use volume charts, I would use suggest something like that as well. If you do the long-term wealth stuff, I don't think you need to go less than a 60-minute chart or even a 4-hour chart is pretty much what I use and higher, 4-hour daily and weekly, and that would be for the longer-term wealth stuff. But we apply the strategy. Nothing changes with strategy across markets or time frames. Yeah, Walker, I would stay away from anything technical analysis for the simple reason. Let me get into that just for a minute now. Well, half the technical analysis books, and I mean like each of them, half of the book is chart patterns, and the other half is typically indicators and oscillators, correct? So we'll talk about, I don't know, indicators and oscillators first, any of them. Here is where we sold short for this trade right here, right? Where the circle is. Selling short right here, if I added any indicator or oscillator to this trading decision here to sell short, would I be selling short here? Remember, if you're using indicators, you want to wait for them to give you sell signals, which means like, moving averages have to cross and, indicators need to turn lower. Is there any indicator oscillator that's going to be turning lower or pointing down, giving you a sell signal at the time we sold short for this trade? I mean, is there? No, there's none. In fact, they're all still pointing up here. Nothing is even coming close to giving you a sell signal. Indicators and oscillators lag price. They're just going to do what price has already done. By adding any tool to your decision-making process that lags price, by definition, all you're doing is increasing risk and decreasing reward. Okay. How many indicators and oscillators do you think we used on a trade desk? Or the banks and funds that were giving us these orders? You think they said, oh, don't sell here. We need price to drop a little bit. Or don't buy here. We need price to rally a little bit. Wait for the moving averages to point up. No. They laugh at that stuff. The other half of the book is chart patterns, right? The other half of the book, trading books, are chart patterns. And go ahead and name your favorites. What are your favorite patterns? Head and shoulders top, double tops, double bottoms, cup and handle. What are some others? I mean, I'm trying to list all the most popular ones, right? Yeah, trying all kinds of stuff. Wedges, head and shoulders. Yeah, any of them. But someone tell me this. What do they all have in common as far as the entry goes? Entering the position in any one of these chart patterns you could possibly think of. What's the problem with the entry? Why don't you see anybody on the planet making a living trading these chart patterns if that's what's in the book? Not only, yes, so they're late, but not only are they late, they're really late. They have you buying at the top and selling at the bottom most of the time, right? Think about the head and shoulders top. You're not entering where the sell orders are, which is creating the head and shoulders themselves, right? You're not selling when price is up. Not only are you waiting for prices to come down, for example, to that neckline, but then you have to wait for prices to break below the neckline and then sell. Does that make sense? Okay. So you're selling after a big drop in price, and you're buying after a huge rally in price with any of the chart patterns out there. Now, I remember when I first was exposed to that stuff, and the first time I saw it in a book, I thought, wow. I remember I was saying to my buddy Mark from the trading floor, I said, he showed me, and this is after I'd been on the floor for a while, I said, wow, this is crazy. Who would do this? He says, well, this is what everybody does. I'm like, well, this is the opposite of what we do on the floor. He's like, oh, Anyway, so, okay. Let's focus here. So, in the yellow box, right, price is trading here for a very short period of time and then falls away, right? So price is trading in this 98.80 to 98.85 range for a very short period of time. In fact, it's trading here for about 5 minutes. Okay, this is a 2-minute chart. So JP, I'll explain to you why it is fresh. So trading here for about 5 minutes, and then it can't trade there anymore. It has to move down to this level, the 98.75 to 80. Why can't it trade here anymore? Why does it have to start trading down here in this range? Why is that? And again, what I don't want to show you here is just, I can create the perfect supply and demand level and build it for you and show it to you. I don't want to show you just perfect examples. Now, I agree, this is not the perfect example, but I want to be real with you. This is trading. Trust me, some you'll see after this, yesterday, the day before, there's some perfect examples in there. But you don't believe, you don't want me to show you just perfect examples. But let me walk you through this. So, right. So Jay, so rejecting of price, I hear that a lot. But what does that mean? What exactly does that mean? Take it down to the orders. Well, okay, so why is price rejected here? It can stay here for 5 minutes. That's it. And then it has to start trading down here. Why? Too much supply. Someone has a lot to sell up here, right? And now when price drops to that 75 to 80 area, whoever was selling up in the 80 to 85, did they sell all that they wanted to sell? Did all the orders on the sell side get filled up there? No. And we know that for a fact. Right? Because if supply and demand were equal or in balance up here, wouldn't price just keep trading sideways? It would, but it couldn't because it wasn't balanced. So very little time here, and then price drops down to this range. And then what happens in this range? After, let's see, after 10 minutes of trading here, now it really starts to collapse. Why is that again? Because you're still at price points here where the amount of willing supply is much greater than the amount of willing demand. Okay? Okay. All right, thanks, Mike. And then, Mike, email me if you have any other questions. So I definitely want to make sure you get you get to the next level as far as success. But I'm glad it's working for you. All right. Okay. So then it keeps falling and falling and falling, and it falls all the way down to here, right? This price point right here where I'm pointing. So let's just keep talking about the information we know to be true. Okay. The information we know to be true is supply exceeds demand up here. And the fact that price came all the way back down to here, what does that say about the demand or buy orders? Help me out here. When price is trading right down here, let's call it 98.56, 57. When price gets down to here, what does that tell us about the buy orders above that price? The demand above that price? Filled. It's all filled, right? It has to be. I want to make sure everybody understands that. In other words, when price is at 98.56, you can't have a bunch of unfilled buy orders at 98.70. It's not possible. They're all filled. They'd be filled instantly. Okay? But what do we know about the buy orders below 98.56? I'm saying at the point of this, the point prices turn here. Well, they're still there. In fact, they're great. The demand down here is obviously greater than supply. Again, just stick to the information we know to be true by the price, by talking about the price action. So now price starts to rally, and it's rallying, and it's rallying, and it's rallying, okay? And it continues to rally, okay? Now it gets all the way back up to 98.80, okay? So, again, what do we know at this point at 98.80, what do we know to be true? We know a number of things. Number one, someone is buying at 98.80 after a big rally in price, more than a 20-point rally in price. Is that a smart move? Can you be consistently profitable buying and selling anything if you take that action? Right? No. Okay, not a smart move. Number two, they're buying right into a price level where the chart already told us banks are selling, supply exceeds demand. Another big problem. Number three, they're making those two novice mistakes at 98.80 at a time where the chart has already told us there's no significant demand till 98.56 or lower. Does everybody all understand that part? I want to make sure. So it's not just those two mistakes that we always talk about. When whoever's buying here, whoever was on the other side of my trade at 98.80, they're also doing that when significant demand is below 98.56. We already have that information at the time of entry. All right, so let's take this a little deeper. Notice all the candles it took during this initial drop in price right here. See this? We can count them. I don't know. There's 1, 2, 3. It's about 15 candles on the way down, right? See that? Just eyeballing it. It's about 15 to 20 candles it takes price to drop down here. Now, why is it so many candles? Because on this initial drop in price, you're met with some buyers here, some more buyers here, some more buyers. There's demand there, so it's going to take more time and more supply to get price down to this 98.56. Does everybody understand that? So the next time price goes down through that area, can you understand why it's almost always done in half the candles or less? You'll see that almost every time. However much time and candles it took on the initial drop in price, after we get in, you're going to do that next move, and usually half the candles or less. Why? Because those orders are gone. Those buy orders that would stop this decline in price are filled. And it's thanks to this group over here that did kind of all the dirty work for us. Does that make sense? Okay. But let's go to let's stick with some more odds enhancers here. So notice up here again, looking at this a 2-minute chart, so price spend about 5-6 minutes here. Is that a long period of time or just a little? Compared to all the other bases you see on the chart, is that a long time or a little? Yeah, just a little time. So again, what does that tell us about the supply-demand equation there? The level of balance or imbalance? Well, think of this. And again, this is very opposite of what the trading books say. At price levels where supply and demand is most out of balance, which is what we're looking for, are you going to get many trades and transactions or very few? Again, at price levels where supply and demand is most out of balance, are you going to get many trades and transactions or very few? Yeah, you're going to get very few. Now, at this same price point, I'll tell you, you have the potential for the most activity, but you don't get it because all that potential is on one side of the market, the buy side or sell side. Obviously here on the sell side, okay? It's like potential and kinetic energy, same equation. Anyway, so now what do the trading books say? The trading books say when you're looking for areas on the chart, in other words, strong support and resistance levels on a chart, look for areas on the chart where there's lots of trading activity, many candles on the screen, above average volume. But if you think the logic through, okay, like we just did, you'll see that actually the opposite is true. So if we all agree on this with this logic, what does that picture look like on the price chart? Is it many candles or very few? It's very few. Okay, so I want to make sure, Xavier, great question. So Xavier's asking a great question here. Do banks and institutions ever cancel their orders? Now, ever is a strong word. So my answer is, I would say hardly ever. My experience on a trading floor facilitating order flow for banks, institutions, big funds, is that hardly ever does a bank call and just, so let me give you an example. So a bank is selling up here. Well, a bank was selling up here this morning, right? Obviously, when price falls away, we know that not all those orders got filled. And I was experienced that on a trading floor, right? The biggest and best orders that we had to fill on a trading floor, you hardly ever filled the whole order, okay? But I can tell you one thing that hardly ever happens is, once price starts to drop, hardly ever is the money manager going to call up and say, oh, how many did we get filled? Well, we filled half the order, we're working the rest. But the guy's never going to come back and say, well, hardly ever is going to come back and say, oh, that's okay. Just sell them at a lower price. That's fine, right? Or if they're buying, oh, that's okay. Just pay a higher price. No big deal. No, that hardly ever happens. In fact, I don't remember it ever happening, right? I just know that ever is a pretty strong word. Okay. All right. And again, a price level where supply really exceeds demand or demand really exceeds supply, that level is never going to fail. What the challenge is the ability to identify fresh levels that achieve a very high odds enhancer score. So that means obviously learning core strategy, then learning odds enhancers, and practicing until you get really good at identifying the levels. So let's go back and look at how about just the month of December really quick. We'll look at every day. We'll start with December 1st. And some of these trades are trades that we take, and I'll point those out. Others are found using the services. There's a trade out of the trading room with our one of our live trading rooms with our students on the 1st. There's another trade on the 1st. So again, this is a short-term income account. On the 1st, it's made about $750 in this one. Now again, the level itself is right inside here. The box is covering more than we need to. But here we can apply odds enhancer number 1. How did prices leave the level? Look at that strong drop in price away from the level, okay, suggesting a big supply-demand imbalance right here. And again, like we talked about before, look at how far prices moved away from the level before returning back to the level. Okay, again, I don't need to walk through that same logic, but you can see selling short here to that buyer is what we want to do, and it's in line with core strategy and all that. So Nice little short-term income profit there. Also on the first, there's the dollar off our supply-demand grid. There's more on the first off our daily market overview in the dollar yen. Okay. Again, look at that level. Very little trading at the level, strong rally in price, and look at how price just collapses into the level. Now, here's why this is a great example, this dollar yen. And again, this was found using our daily market overview. This comes out every day. All these services I'm showing you are out, every day, Monday through Friday. But this is an example. You might say, well, someone might say, and go ahead and say it if you want to. If this is so easy, how come everybody's not doing it? I mean, is anybody thinking that? Because sometimes they think like, man, I don't want to make this sound too easy because right? If it seems too good to be true, it's got to be too good to be true. Isn't that how life works? Right? I mean, if this is so easy and you just follow some rules, how come everybody's not doing this? This is a great example of why. Okay? This is a great example of why. Notice the entry here. So very, very early in the market on the morning on the 1st, we gave a demand zone in the yen right here, instructing our students to buy here if they wanted to. Here's the level. A little bit later, right, price collapses into that level. That's a big drop in price, okay? Let me ask you this. Who's going to be a little nervous pushing the buy button after what's probably the biggest red candle on the chart right here? Remember, you don't see any of this green yet. Anybody going to be a little nervous there? Yeah. And what do you think the news is when price is collapsing like that in the yen? If you're looking at your real-time news or watching TV, is it going to be good or bad? Yeah, it's not going to be good. You think anybody on TV is going to be telling you to buy the yen down here? They're going to be telling you why it's falling. But I want to go back to the first one. If you'd be a little nervous or a lot nervous pushing the buy button down here, let me tell you why that is. That's because, and again, I'm not picking on you, but most people around the world, when it comes to trading and investing in the financial markets, are conditioned to think, act, and trade like retail traders. Okay? My job at Online Trading Academy and with you is to get you to stop thinking like that and start thinking like a bank does. Okay? So let me tell you the reality of what happened right here at the demand zone. The reality of what's happening right here, if you're a little nervous, is that you just walked in your favorite store. There's a sign right there that says your favorite item that you came to buy that day is on sale for half price, and there's only 2 left, and they're in the back of the store. What are you going to do? Are you still going to be nervous, or are you going to be excited and run and try to grab those 2? Right? Make sense? That's what's happening right here. So what happens over a period of time, learning strategy and applying it and trading it, the conditioning actually flips. If you go to some of the trading rooms at Online Trading Academy, people are, instead of being nervous here, they're super excited to buy down here. Like, yeah, I got the yen on sale. I got it at this deep discount price, demand zone, and someone sold it to me down there, Anyway, I think you get the point. All right, so let's keep going through here. I know we're almost out of time. So there's the first, December 1st, more on the 1st, more on the 1st. There's the second, using the supply-demand grid. More on the second, more on the second. Again, these are, when you see the trade screen there, those are just the trades that I'm taking each day. Second, again, I just want to show you the same pattern and picture over and over and over. Second, third, yeah, lots of trading activity. There's a FX. There's the yen. There's the pound on the third. Pound. SP. Still the third. Third. Got to speed up here. Fourth. Aussie dollar. Euro yen. Bonds. Pound. Crude oil. Yen. Still all the fourth. Lots of trading activity on the fourth. And no one's suggesting you take all these trades. But these are all the trades I put out with our services. And there's the fifth. I'm just going to click through a little quicker. I take some of these trades, and as you can see, personally, I'm taking usually about 2 of these trades a day. There's a level that did not work in the yen, so occasionally a level will not work. but that's okay. If you're following the rules, the majority should. Okay. And then here's the eighth. Move it forward. And let's get over to, here's the ninth. That's the pound. There's gold. And here's the NASDAQ yesterday. And which one did I want to focus on? Oh, the dollar. So this is the dollar chart from yesterday. Yeah, I think that's the one. Let me go back. So we had a demand zone here in the dollar, which is key for trading most FX markets. But again, look at the level down here. I want to show you this one. Okay. Notice this little demand zone here. It doesn't really look much different than the price action above it and the price action below it. Yet this base below and base above would never qualify as a demand zone if you're following our rules. Why? What makes this base different that we took that ended up being, causing the perfect turn in price? What's the difference? It's an odds enhancer. It's odds enhancer number 2, time at the level. There's way too much time at these other levels, telling us that supply and demand really there cannot be a big imbalance. If there was, price never would have stayed there so long. So that odds enhancer yesterday was key to choosing this middle zone in between these other two, which aren't even demand zones to us. To someone else, this may be a demand zone. It's not. It doesn't qualify. There are other odds enhancers. I just wanted to spend time focusing on some of the key ones. 2 or 3 of the key ones for you. And so in this information on the dollar turning at our predetermined demand zone from the supply demand grid, you could trade, you can look for a supply zone at the same time of the euro or any big major currency against the dollar, right? So we focus on that dollar chart quite a bit. Okay. So there's my email address, sseiden@tradingacademy.com. If you have any questions, comments, feel free to send me an email. If you're struggling in your trading and you need some help or what have you, that's the goal here. Again, the focus needs to be orders, orders, orders. Where are the significant buy orders? Where are the significant sell orders? Nothing else. I don't focus on anything else. I have no interest in anything else. Anyway, I hope today was helpful. I really wanted to put a lot into this and make sure you kind of got the basics and understand it at a deep level so that you can really, start applying it. And thanks to FX Street for putting these on. Have a great day, everybody, and we'll see you next time.